Welcome to Master Your Money, the podcast that teaches you how to take control of your hard-earned money, all while living your best life. I am your host, Elizabeth Hiza, Chief Marketing Officer at the Barnum Financial Group. I once felt powerless when it came to managing my finances, and my attitude follows suit. Until one day, I changed my mindset, built up my knowledge, and put myself back into a financial position of power. And I started this podcast to provide you with the same education and advice that I received on my journey. Now, I want to help you master your money. Hello, welcome to today's episode. We are here with John Pearson. John is a financial planner and a financial services executive here at Barnum Financial Group. John also has been a CPA for almost 40 years and a financial advisor for 31 of those years. John helps people create financial strategies that are consistent with their life goals. Chief among those goals are retirement and helping fund their children's college education. Today, John and I are talking about all things student loans, but more specifically, we are going to talk about student loan, the forgiveness program. We're going to talk about alternatives to student loan forgiveness. And we're also going to talk about the suspension of the payment plan that was put in place due to COVID. So these are all some of the hottest topics that are being talked about when it comes to student loans. This is all over the media. People are reading things that are true, maybe things that are untrue. Some of it is very, very confusing. But luckily, we have John Pearson here who is going to tell us what is what. So, John, welcome to the show. Where should we start here?
Well, I think the things that brought all these topics to the head here was the having to do with the Supreme Court and the proposals that Biden put out there that would have given up to $20,000 of student loan relief to, literally hundreds of thousands, even millions of people. And that was struck down by the Supreme Court. And that was somewhere around 6 to 8 weeks ago. And even since then, there have been so many other developments going on, a few of which you've mentioned, that have kept that topic up in the top of the media right now. So, followed up with that was have things having to do with replacement proposals. Immediately after that was struck down, the Biden administration started talking about things that they're going to do instead, or new ways that they're going to propose this all over again. And, when we talk to a lot of our clients, they're already, they've already got their antenna up about this, and they're starting to say, well, geez, maybe I should just, rather than do anything about this, maybe I should just wait for that to be forgiven. But I think that any program like that is going to have to end up going back to the Supreme Court anyway.
What happened first, John? Was it the suspension of the payments, or was it the proposal for the forgiveness program?
Well, the first thing that happened was the suspension of the payments back when COVID started. That was almost immediate back in March of 2020. And those were for federal loans only. So people who had student loans, let's say from a private bank or from some state agency, nothing really changed there for them. But the federal loan programs that a large majority of young people and parents deal with were all suspended for a while with no interest accrual. But as of a couple of months ago, the announcement was made that those were going to start resuming on October 1st, which has gotten everybody kind of, excited about, well, how am I going to fit this into my budget?
Right, because they have been so used to, I'm sure most people just stopped payments altogether, because you could have made
payments if you wanted to.
You could have kept it going as you were and paid down the principal. Most folks probably could not or chose not to do that.
Yeah, that's exactly what happened. And in the midst of all that, to make things even a little bit more confusing at the restart, a lot of the student loan servicing companies that were out there taking care of these people before the COVID shutdown have all been replaced. So when people do resume their payments, all of a sudden they're going to be dealing with a new servicing agent in addition to having to resume payments. Now they have to talk to somebody new and say, well, Am I paying the right people?
And you mean like a loan company when you say servicing agent?
Yeah, a loan.
You mean that companies are consolidating, they're merging, or one is buying out another.
Yeah, some people have dropped out of that business and somebody else has replaced them.
Yeah.
So the first thing that I always have been telling people as these last couple of months have been going on is make sure you know who's servicing that loan and who to write that check to. Because if you start to send that check off to the wrong place, you could end up with a delinquency issue and all those things. So that's really number one for people who have loans, that they aren't going to try to have the payments adjusted by some other means, like an income-based repayment or something like that.
Because most folks, again, March of 2020 said, okay, phew, this is one thing I do not have to worry about at this moment. 3 years go by, you haven't looked at this stuff. Right. Now it's October, right? So
No. I just want to clarify. September 1st is when interest starts accruing. The first check you'll write is actually going to be on October 1st. So people understand that that's, a little different than saying things resume on a certain day. Interest starts pretty soon.
And that's why we're out talking about this now, because this is an excellent opportunity to start to look at some of the federal programs that are out there to help you reduce the amount of your monthly payment, because there are some really generous programs out there that a lot of people, number one, don't know how they work. Number two, don't know whether they're eligible for them. And, they could even be in a situation where they're eligible for loan forgiveness. I'll give you a brief example. I spoke to somebody maybe about a month ago who was a teacher at a private school. And she is in a situation right now where her loan payments are suspended on her federal loans, but she will have to restart them again. But since she works for what's called a nonprofit organization, if she starts enrolling in something called an income-based or an income-driven repayment plan, even though her monthly payments might be minimal, after 10 years of working for a nonprofit organization, her loans will be forgiven no matter what the balance is.
Oh, wow.
But she thought that, I thought that was only for public school teachers. She's a private school teacher.
Sure.
But it's a nonprofit organization, just like working for a state government would be deemed to be a nonprofit organization. But there's so many people, because these programs are so complex, and so there's 4 or 5 different of these income-based repayment plans that make navigating them very complex. If
she did not come to you, how would she have known?
I don't know. It was purely by accident that it kind of came up, because I didn't even know she had any student loans when we first started the conversation. And, she was referred to me by another person, not necessarily for student loan things, but because we encountered it along the way, they just, it just kind of came out in conversation.
I heard a story of another person you had helped who came to you for just this exact reason, to help navigate this. And you were able to uncover for her that her employer, she worked for a university.
Yes. I remember that one.
Yes. Yeah. No, I don't know if that was part of a program through her employer, but that her employer paid part of that loan.
Well, that's another area where there's some new news on that front, because when you look back on some of the recent legislation that's gone through Congress, there is a program out there that is allowing employers to, in this case, there were 2 things that she could do. Number one, the places she worked at would actually help with their student loan payments, which she didn't know. And number 2, since that freed up money for her, that would allow her to put more money into retirement plans. What she didn't know is that plan, in addition to matching her 401k contribution, would also put an employer match in on the money she was paying on her student loan payments.
Get out.
So that was kind of a double win for her.
That's a huge win.
Yeah. So, that's one of those ones when you hang up the phone, but I really did something good today.
Yes, absolutely. So, talk about making your day, making somebody's day with one phone call.
Yeah. So that was a really good experience for her and for me.
Yeah.
So
is it possible, John, for people to know this on their own? Like, there does not seem to be one central website or database or place people can go.
Well, the Department of Education, when it comes to federal loans, the Department of Education has a good resource page, besides helping people with filling out financial aid forms, there's a lot of good information about student loans, but people, they don't know what they don't know. And, they don't really know how far to dig in or whether some of this stuff ends up applying to them. And that's where just relying on the Department of Education website could be kind of an impediment. And there's so many different sources of loans out there. When people start looking for student loans, their main idea in their head says, well, darn, I really hate to have to borrow money in the first place. Mm-hmm. So if I'm going to have to borrow money, I might as well go to the least expensive interest rate, because that's what we've all been trained to do. Mm-hmm. Is just find the cheapest interest rate and go borrow money there if I can. So a lot of people don't really know what their options are, both for, student loans by the federal government, private student loans, whether they should borrow against their house, if they have that ability to do so, or maybe even borrow from a family member. So, to answer your question, there's really not a central website to be able to say, pick from one from column A, one from column B, and this is the right path for you.
Yeah.
So much of it is dependent on, an individual's circumstances and what their goals are for the child, what the child's going to be doing after they graduate, or what we hope they'll be doing, because no one really knows. But also, how close the parents are, if they're going to help with all this, how close are they to retirement? Yeah. There's a lot of moving parts.
A lot of considerations. You mentioned that there's federal programs. I think you said 5 or 6 federal programs that can help reduce the payments that are starting.
Right.
Can you walk us through?
Yeah. They all have little acronyms. One's called the REPAY program. Mm-hmm. One's income-based repayment. There's an old income-based repayment and a new income-based repayment. And the other one's has a name called REPAY, REPAYE. And what those stand for, you got me. But there's a new program that has just been put out by the Biden administration, the Department of Education, called the SAVE program, SAVE.
I see that one a lot.
Yeah, that's one's, again, thinking of current headlines. That's one you're likely to see in the news cycle right now.
Okay.
And the common thread of all these is that what they're trying to do is to look at your current income situation and compare that with things like the poverty line in your region of the country.
Yeah.
And say, well, if your income is below that, then you should really have no loan payments. And if it is above it, depending on how much it is above it and what your family size is, will determine what the maximum payment is you can afford. And then you have to go through this process every year to recertify. So see what your income is now. Mm-hmm. And sometimes that means linking to your tax return. But what a lot of people don't know is that the tax return can also be a moving target. So as an example, let's say it's a married couple and they both have a reason, one has a really high income, but the one with a lot of student loans has a low income. Mm-hmm. If they were to put their joint return out to the Department of Education and look at that, and you choose maybe the wrong payment plan, their payment could be so much higher than if they maybe filed their taxes separately and then looked at just her income and then took a percentage of that to say how much the loan payment would be.
Yeah, you really need a strategy.
Yeah. It really, really is a lot more complex than it should be. In order to study up on this, I went through a course for a certification called if you can believe it, a certified student loan professional.
I believe it, John.
Why would there have to be
yes, you're right.
a certified student loan professional?
You're right.
There's no reason on this planet why somebody like that should exist. But because there's so many.
Well, congratulations on your recent certification.
Yeah, well, I still haven't quite passed the test yet. The test is really hard.
Okay.
But the curriculum, it's like a mystery novel. It's because there's so many twists and turns here that you have to be aware of.
Well, I love that though, because I love to know that there's some governing board making sure that there's great people like you out there helping so many folks get the right information.
Yeah. They are a great resource for for good background information and to talk about what's going on, governmentally right now. That's the kind of background that you need in order to help people work with agencies like some of these servicing organizations.
Mm-hmm.
A lot of the loan servicers, when you're looking for advice, the folks who answer the phone at the other end, they're not going to be much help to you. I mean,
they want forbearance or deference. They want to kind of move you in one bucket or another. But if you're like, no, and you want to apply for one of these programs, they're not going to be able to advise
It's
you.
kind of like going, if you had your money at a bank and you wanted financial advice, it'd be like going to the bank teller.
Mm-hmm.
The bank teller is a wonderful person but when it comes to
they have a specific job and role to play.
Yeah. So that's the same thing when it comes to the person who answers the phone. At the other end, they're probably not going to be able to give you a personalized direction.
And unfortunately, that person is probably where most people go.
Mm-hmm.
Right?
Yeah.
I think it's just natural that's
that's
a natural thought process.
Absolutely right.
John, so somebody who is maybe mid-30s, they have a great career track. They're on their way up in the world. Maybe not married yet, maybe newly married, went to graduate school. So they're still paying off a boatload of loans.
Yeah. Graduate school, especially. What should they do? Yeah.
Walk us through what what a listener who's like, this could be me. What steps should they take?
The first things they could do is, especially if they have federal loans, well, even if they have private loans, is to inventory them. Okay. Because every loan is separate when it comes to the federal government side. So when you look at those graduate loans, and let's say you're in graduate school for 3 years, you could have 3 separate loans for those, and then plus your undergrad loans, and then your private loans. And you would treat those differently. The private loans, your main goal there is, if you can find a better interest rate, to look at refinancing and repackaging them or extending the payment schedule.
In your experience, how many loans does the average person have? How many service providers does the average person have?
It really depends. If you're talking about the average person who graduated from 4-year school, probably 4 to 6.
Yeah.
All right. When we talk about somebody from graduate school, that could be over a dozen.
That is insane.
Yeah. It's hard to, and that's what makes the process so intimidating.
Yes.
Is that,
and I'm sorry to interrupt you. Intimidating and overwhelming.
Yeah. I mean, it makes it really hard to grapple, and that's why people say, well, I got to make this easier. So they do what's called a consolidation. And sometimes that's a good thing because it helps kind of make it a little easier. But sometimes, depending on how you consolidate or refinance, which may be with a private lender, if let's say you had a bunch of federal loans and then you go to a private lender, a major bank or something like that, and refinance them, all of a sudden your ability to utilize some of these federal discounting income-driven repayment plans have been taken away. So in the name of simplification, you've maybe taken away a ton of options. And so that's just in the name, you feel like you want to make your life easier. And in the process, you've messed it up.
Because you don't know what you don't know.
Right. That's what it is.
Okay. So step 1 is we're going to inventory our loans, private versus federal. And for the private loans, we're going to see if we could refi and get that interest rate down.
Yeah. Then the next step would be, if you have the federal loans, then to look, the Department of Education on their website does have kind of a light duty estimator as to how you could potentially benefit by some of these income driven repayments, if at all. So that would probably be the first step. It's not too hard to do. And it also takes the direct feed off the information you just took off their website.
Okay.
Because you should really download all your loan information from them.
Okay, so go to the Department of Education. Is it like a calculator that's on there?
That's exactly what it is.
Okay.
It's a calculator of some kind. Yes.
Great.
Yeah. So that would be, and then kind of get a sense of what kind of savings is out there. But if you get a sense that, I could say, even though it might stretch out the term of my loan by 5 or 10 years, if I could save, $1,200 or $1,000 a month, that might be worth it to me currently. So it allows you to at least start to make some reasonable decisions.
And that's also where combining this work with taking your financial plan into consideration.
Yeah. Because, that links I always like to think of financial planning as kind of like a Rubik's Cube. When you look, again, one side taxes, one side retirement, one side borrowing. And if we can do something to help the side that's borrowing, that could allow us to do more on the retirement side and so on and so forth.
Yep. But it's analyzing that question.
Yeah.
What's better, shortening the term of the loan or extending the term of the loan, but saving money?
Yeah.
And as we always say on this show, it all depends.
Yeah.
It depends on your situation, your income, your cash flow, your objectives, all of that.
Yeah. Yeah. And what we generally find, just rule of thumb, is that if, let's say, you have an income of $75,000 and you have $20,000 or $30,000 of student loans, doing the income-based repayments probably not going to work out for you. It'd probably be better just to really address those loans and try to pay them down. If we get someone like a graduate school person who maybe has maybe a doctor or a dentist, somebody who has multiple hundreds of thousands of dollars of loans, those people are going to, even especially in the early years of their career, where, oftentimes we all think that, when a dentist graduates after 10 years of college, they're going to walk right into a huge income job. Well, that's not the case. So they might come out with an income of maybe 90 or 100,000 and have $400,000 of loans. And these are the type of people for whom knowing the path through this system would be especially helpful.
Is there hope for people like that, or people who are, in their 30s, possibly 40s, possibly mid 40s, who are still paying off loans from graduate or undergraduate school, who are making a good income supporting a family? So maybe they are kind of well above that poverty line. Are there programs available that can assist those types of folks? Oh,
yeah. Yeah. And, a lot of those people who need that kind of advice are the ones who don't necessarily have the hugest incomes, but have had to because of needing an advanced degree. As an example, we talk to a lot of teachers in this regard. Nearly every teacher I know is always reaching for a master's degree at a minimum. That often requires, them having $75,000 to $100,000 worth of debt.
Sure.
When we look at school counselors, same thing. People who needed that advanced degree, but who maybe don't have the big, huge incomes right now. Okay. Those are the people who really need that kind of help and direction to be able to deal with numbers, and by doing a little bit of tax planning, like we talked about the married separate situation, they could really do themselves some good. Yeah.
So it's not in anybody's best interest to assume this won't apply to them.
No.
To assume either they've had them for too long, to assume they make too much money, to just make any of these assumptions. You have to inventory, you have to go online, use a calculator, talk to somebody like you, John, I would imagine would be very helpful.
Yeah. And have it not just be the students. There's a whole other category of debt out here called parent plus loans that a lot of these same principles can apply to. So as an example, if we look at a parent who's in an article that I just wrote here for Barnum, I put out an example of a family that has 3 kids headed off for school. They're going to have they anticipate that when all is said and done, that they're going to have to borrow somewhere around $200,000, which, sounds mortgage-like, But when they look at it all, they will probably they'll say, well, let's go for the lowest interest rate because that's what I've always been trained to do. However, if they were to look at some of the federal programs, even though those have a higher interest rate, those higher interest rate programs could allow them to do the same things that their students might be able to do with some of these income-based repayments if they consolidate their loans properly. There's a technique out there called double consolidation that would allow them, let's say when you did some planning ahead of time, you picked the parent who had the lower income to be the one taking out the parent loans. And then once you started paying them back, let the file separately, have the lower income earning parent be the one whose income is measured against. And then, if that parent also happens to work for a nonprofit, better yet, you could actually get some loan forgiveness. And the nice part about it is if you qualify for that loan forgiveness is not taxable Because a lot of people forget that when they get these loans forgiven one day, they're going to have to write a tax check.
Yes. Again, another decision that has to be made up front, though, to your point. Are we doing a parent loan or are we going to put it in the student's name?
Well, yeah, that's part of it. But even let's say the parents decide that they're going to take out the loan themselves. They're going to be looking at, well, I could go borrow from some state agency. I know here in Connecticut, we have a state agency that offers low interest loans for people who are Connecticut residents, as an example. Should I borrow there at 6%? Or should I go to this federal loan at 8%? And then you say, well, that seems like an easy answer. Let's go to the 6% one. However, that one does not have
any of these
the
programs
abilities
available
to allow you to down the road, bring your payments down to something that's affordable. Yep. So it's really stuff you really have to do up front.
Yep. Wow. It's a lot to unpack. It's a lot to know. What I hear most just from my friend group, from the folks I'm around though, is just how overwhelming it is and how people just make the assumption that they make too much money, that they won't, none of this is for me. None of this applies to me. I won't be able to take advantage of this. Yeah. That's what I hear a lot.
Well, that gets back to the whole financial aid thing. They just, that they're in that category, which is a very big category of people that make too much money for the need-based financial aid, but for whom writing hundreds of thousands of dollars of checks out of their own money just isn't possible.
Sure.
And so that's what takes them back down this loan path. And then without any forethought, they just borrow money from whoever gives them what they think is the best deal.
Yep.
And that's the part that we're trying to educate people a little bit about by podcasts like this and articles and so on.
Yep. Because it sounds like it's just not true, or it may not be true.
Yeah.
You may be eligible for things.
Oh yeah.
I think it's not safe to say it's an immediate no.
Yeah.
You have to look.
Yeah. You have a lot of families around here that we know that have wide diversity of incomes within the family. And if you do have to borrow money, this plus loan situation that I described before could be a really good fit in that situation, even though the total household income might be $400,000, $500,000, $600,000.
Yep.
If 500 of it comes from one and 100 from the other, it makes a difference.
Yep. John, I'm curious on your thoughts on why the Supreme Court did not rule in favor.
Oh, of the loan forgiveness?
Of the loan forgiveness. I don't want to get too into it, but I'm just, you've been working in this field. You've dedicated your career to understanding this field and understanding the loan process. So I don't know anyone who's more invested in legislation here than you. So I'm just curious.
Well, from my standpoint, I think it was kind of reversed on a technicality more than anything else.
Yeah.
It was basically, in my view and what I read, basically that the Supreme Court said that the president doesn't have the power to do that. So just like in any good tax accountant who, when you can't go in the front door, tries to get in through the window. Right now, the federal government is going to plan B and say, well, let's work out something for another way to give that forgiveness that we really wanted to give.
And that's what they're doing with these programs.
And that's what they're doing with some of these programs, as well as, working with the Department of Education to do it what they think is the right way. But again, I think we're going to end up back in the Supreme Court again. So for anybody who's waiting for loan forgiveness to help bail them out of this thing, don't wait.
Don't wait.
Yeah.
So start October or November, know when your payments are going to start, put it back in the budget.
Yeah.
And just get that going.
And then start to think about whether, some of these other programs might apply to you. It's going to be hard to go out and refinance a private loan right now at a lower interest rate because of rates being up. There's many of these private lenders out there that are easily getting, 6, 7, 8% on these loans, whereas 2 or 3 years ago, they might have been half that.
Yeah.
So refinance may not be an option right now.
Yeah.
But maybe in a couple of years, we can reexamine that issue for the private loans.
Sure.
But the federal loans, there are tons of options out there that you really need to look at.
All right. So we need to face facts.
Yep.
Get those payments going again. In the meantime, let's do our inventory, refinance what we can, if we can, but then look at some of these federal programs and see if you can catch a break.
Yeah. And then take that money and then redirect it to something more worthwhile, other than debt service, maybe put it in your 401k or someplace else where it's going to long-term do you more good. Oh, that is great. This was wonderful. Thank you so much for clearing up a lot of myths and rumors that are out there. Thank you for simplifying this information as well as you did and for giving us, myself and the listeners, what steps we need to take to hopefully save a little money here and take advantage of these programs. Such a pleasure having you on, John. Thank you again. No, it's great to have an opportunity to get this message out. So thank you. Thank you for listening to Master Your Money. Please rate, review, and subscribe on Apple Podcast, Spotify, or wherever you listen to your podcast. Every little bit helps. You can also follow us on our Instagram at Barnum Financial Group. If you're interested in connecting or working with a financial advisor at the Barnum Financial Group, the links are in the show notes of this episode.
All opinions expressed by the program participants are solely their current opinions and do not reflect the opinions their respective parent companies or affiliates or the companies with which the program participants are affiliated. Investments or strategies mentioned in this program may not be suitable for you, and you should make your own independent decision regarding them. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You should strongly consider seeking advice from your own investment advisor. Securities and investment advisory services offered through qualified registered representatives of MML Investor Services, LLC. Member SIPC, 6 Corporate Drive, Shelton, Connecticut, 06484, telephone number 203-513-6000.